Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is March the 26th, 4:46 in the a.m. Eastern Standard Time. Let's get to it. It's a bit early to go over the pre-market activity. What I'm going to do is I'm going to switch it around this morning. We're going to go over our member stock chart request, which is where I review the symbols that our members submit for me to review, and a few watch stocks, and then we'll proceed into the pre-market activity at around the 5 a.m. hour. So let's kick things off with a symbol submitted by a brand new member, fellow member Marvin. Welcome aboard, Marvin. Great to have you. And his symbol is ROKU. Now, I discussed ROKU as a potential short over the weekend on best stock charts, and I did a deep dive on my analysis on Sunday's The Week Ahead commentary with members. So members, that video is still posted on the members area. And to watch best stock charts, I'll link to it at the end of this video, so stay tuned. All right, so let's do some analysis of ROKU. We'll begin, as I like to normally do, with the weekly chart. And we're looking to short ROKU, and you can see that we popped up higher yesterday. And the question I had going into the week was, would we see a continuation move lower week over week? And thus far this week, we do not have it. In fact, we have rallied, we have tapped the prior lower band of support. But what does that mean? It means that we broke down below key support. We're trading below it right now on a weekly basis. So that's not a good thing. And we are seeing wicks, shadows, topping tails, call them cupcakes. What it implies is that we have sellers above, and they are selling strength. So the weekly chart is still a bit of a concern, and if anything, it has gotten worse despite the fact that we are trading up on the week, because we are trading down below the lower band of the rising uptrend channel. Could we consolidate here for a couple of weeks? Sure. And that would set the stage for a continuation move higher. We don't know yet. We don't have enough data to support us opening up a short trade daily chart. Now, on a daily basis, we had a really good day yesterday. We had an outside reversal day. We managed to close above a support level, the prior support level, which is good stuff. It even attempted to break out, but that breakout was rejected. RSI is rising. Volume was very good. So you saw some institutional demand. Stokes are rising. So the daily chart, a fairly good day yesterday. Not a great day, but a fairly good day in that we're able to recapture support. Now, what I'm looking for here is to add as a short. I'm looking for a rejection at the $67 per share level, which is about where we closed yesterday. And I'm looking for a pullback below this lower band of support, and ideally a break to new weekly lows. That would have me itching to put on a small short trade. When would I add to that trade? I would add on a break below 59.63. Why? It's because the bigger picture here is that we had a prior high last seen at $77.57 back in October. A new lower high on March the 8th at 74.35. A break below 59.63 would be a confirmation breakdown of ROKU. And then I would add more aggressively to our short position on a break below that level. Now, if we rally and close above $68 per share, well then, ROKU all of a sudden starts looking pretty attractive from a risk-reward perspective, because if we fall back down and close down below $66 per share, you stop out with a small loss, and you add on a rally up and through 74.35. So there's a lot to be done here with ROKU. And as traders, we're not emotionally involved. I don't care if it goes up or down. I just want to make sure that it's behaving well and that my risk reward is in my favor. So more to come on ROKU. Moving on to our other focus stocks. We have next up NFLX. Normally I like to go over the weekly charts and then drill down to the daily charts to get a feel for where the shares have been from a higher level view, and that'll help guide us to where they'll probably be going. Now, yesterday, the shares managed to close up on the day. But remember, this bar is only a one-day view of a weekly chart. Last week was pretty butt ugly. We had a bearish reversal week. But we are consolidating here. We are holding a support level. Our stochastics, which is a momentum indicator, along with RSI, they're both rising. And you may be saying, Bob, you have Stokes, which are above 80. Isn't that overbought? Sure, and they could stay overbought. So let's not get too wrapped up with the fact that you have Stokes on a weekly basis above 80. We could be talking about the Stokes still being above 80 3 weeks, 4 weeks, 5 weeks from now. I would worry once we begin to roll over and break down to new lower highs and lower lows. That's when I would get concerned. Until then, they look good. Ultimate oscillator, pulling back, breaking out so far this week. Let's take a look at the daily chart. Okay, so yesterday we retested support at, let's call it, what was the low of the day? 357.44 per share. Obviously no new daily high. What we do have setting up here, possibly, is an inverted head and shoulders setup. Left shoulder, head, right shoulder forming, and here is our neckline up here at the 379 level. If we break out and above that level, then it's probably game on to tackle a weekly breakout as well. So the chart, despite the fact that these markets are a bit iffy, is looking pretty good. Would I be a buyer here? Probably not. Too much indecision out there. I would rather wait for a breakout and a close above resistance. Then I would look to put the trade on. And these shares are certainly not a short. Moving on, next chart up, Amazon weekly chart. No new weekly high. Last week we had an up week, but we closed well off the highs of the week. We have a topping tail or a wick. We were rejected at the 1,823.75 level. Our Stokes are rising, good stuff, bullish. RSI rising, bullish. Up volume last week was very good. Far too early in the week to talk about volume thus far. Let's go to a daily chart. All right, so on a daily basis, we had broken out last week here on the 20th. We had a continuation move higher on the 21st. Then we failed. We rolled over and broke down below key support. So what this is here was a bull trap or a breakout point failure. Call it whatever you want. Call it cupcakes. It's just bad stuff when you get a breakout and then a rollover. So would I be a buyer of the shares of Amazon here? No. Why? Again, what I've learned all too often is that many times after a breakout point failure, we normally retest the lows of a trading range, and many times that support level breaks. Now that may never happen here, but it's a concern, and until such time as we close back above this resistance level, I would not be a buyer of the shares. Volume on Monday was below average. So Amazon right now is a show me stock. It needs to show us that it is worthy of our investment dollar by being able to close above 1778.34. So we'll keep an eye on it. Alibaba weekly chart. I'm liking the setup here on a weekly basis because what we have forming is a wedge formation. We have our Stokes rising, RSI, higher lows, and this is what you want to see. Your indicators are validating the price movement. It's always critical. Annotate your charts, save them for a future date, memorialize your thoughts. So the weekly chart so far this week, remember, we only have one trading day in the book so far. So remember, this weekly chart could look a lot better by breaking out later in the week, or it could look a lot worse by breaking down later in the week. So we want to give the weekly chart some time to mature. Let's go to a daily chart. Now, the daily chart will imply to us what are the probabilities of us seeing higher highs here on the week. And I think that it's entirely possible that we'll come back up and retest the 180 level. But much as what we saw with Amazon, we saw two breakouts fail at this level. We broke out here on the 25th of February, rolled back over, it failed. We broke out yet again here, the 12th of March. Spent a few days trading above it, then we rolled back over yet again, putting in lower highs. Now, I will caution, what I do not like here are the stochastics. By the end of trade today, in all probability, absent a gap up high this morning, Alibaba will have both lines on Stokes trading down below the 50 level. We're putting in lower highs and lower lows. And when you have your Stokes declining and down below 50, rallies tend to fade. So please, don't go chasing these shares. Wait for a breakout, and let's get these Stokes moving in the right direction, because right now they are not heading in the right direction. Up volume on Monday was very, very light. So let's not get baited in here by one trading day higher on light volume. Let's take note of the indicators and let's respect them. They're sending us a signal. Now, pulling back here, taking a look at the base that's forming here, I mean, it's really, really attractive. We have a nice W formation, which is formed. 168.80 is the pivot point of the W formation. If we fail to hold the support level, brother, look out below for the shares of Alibaba. But as it stands right now, the trend remains higher, but we need to see a breakout. I'd like to see a close above the 180 level, and then we will look at the shares of Alibaba. The next chart up, Chipotle Mexican Grill. Again, weekly chart. This is a stock whose fortunes appear to have changed. For the longest of time, it was in the doldrums. Let's take a quick look at a monthly chart to illustrate. You can see we were in a long-term downtrend. That downtrend has ended, and I'm not going to be the least bit surprised to see Chipotle challenge all-time highs sometime this year. What a recovery story. So is it time to buy? Let's drill down. We'll go back to the weekly chart first, do some analysis. Okay, so we have not put in a new weekly high thus far. We did flash a bullish reversal day on Monday. Remember, this is a weekly chart, but only one day is represented thus far, being Monday. So this chart can change dramatically over the course of the next few days. Our Stokes are a bit extended here. This would make me a bit nervous. We have Stokes above 95 on a weekly basis. So really overbought. RSI still has some room to the upside. Let's go to a daily chart. Daily chart. All right, so RSI is at 84.46. Now, many people will get nervous and say, you know what? You need to short this stock. Don't do it. It can go higher. Stokes continue to put in higher lows and higher highs. And take note of the fast line on Stoke yesterday. It pushed higher. So I'm not going to be the least bit surprised to see a continuation move higher. Now, the markets have been sending a bit of a signal here, as noted through the 19th through to Friday, that we're seeing a little bit of exhaustion. We're seeing some profit taking here, as noted by the wicks on these candlesticks and the fact that on Friday we were not able to close at the highs of the day. We closed up on the day, but we gave up a lot of those gains. So the market sent a signal, but it also sent a signal on Monday in that it pulled back, meaning the shares of CMG, and then we reversed to close off the lows of the day, which implies that we have support at 670.45 per share. Volume was above average on Monday. So I think that in all probability, we may just push higher here. But we are nearing overbought levels. We are overbought technically, but we can press higher. We aren't at extreme overbought levels yet. Boeing. Okay. Some good news for Boeing. Shareholders, if you're still long, if you're looking to buy it, some more good news. Where we found a bottom last week and where we retested this week was historical support at the 360 level. What was the low of the day? 362.89 on Monday. So we were in this trading range for quite a while, all of 18. It even broke down at one point in time and then recovered during the November-December sell-off. So now the question remains, do we hold this support level? I think that from a risk-reward perspective, that these shares can be bought if you're a long-term holder. I would just use a stop below the 360 level, because if we break that support level, we may retrace all the way back down to the December lows. Daily chart. Okay, so we have RSI, which is bounced off of the 30 level. That's bullish. Stokes is still declining. We had a bullish reversal day on Monday on volume that was about average. I think that you could put a swing trade on here, but again, you need to use a stop right below this 360 level and get out with a small loss. And I would expect the price target to be between 385 and 390 per share before we hit some stiff resistance. And if you want to keep a really loose stop, if you're buying this as an investment, the 355 level looks like good support as well. You may just want to put a stop underneath that level if you want to stay with the stock long term and you want to give it some room to consolidate. And the only way I would put this swing trade on to the long side is if the markets were moving higher. This stock is going to trade with the market. So if the markets begin to roll over, I would avoid Boeing like the plague. The next chart up, AMD, Advanced Micro Devices. Now, I have my concerns here about AMD. The weekly breakout is still intact. We talked about this one a couple of weeks ago. We got the breakout we were looking for. Stokes is still rising. RSI is looking good. But on a daily basis, we had a breakout point failure. We broke out here on the 21st. Today, we gave it up. So there's a very good chance that we retrace back down to this lower band of support at the 2450 level. So I would be a little bit careful here. Volume was high on Friday. It declined on Monday. So I would avoid these shares right now until such time as they break back out and close above the support level yet again. And we're going to leave off with LABU. Now, LABU was on our watch list last week. We were looking for a continuation breakout last week, and we got it. We put in a new weekly high, but we reversed to close at the lows of the week. So we broke out the week of the 11th, and then the following week, we gave it all up. This week, a new weekly low. The question is, do we hold $50 per share? Will we retest the support level, and does it hold? Daily chart. The daily chart is looking pretty weak. We have RSI down below 50. We have lower highs on our stochastics. We broke down on Friday below this lower band of support. I think that LABU, we're going to have to continue to watch here. I would not be a buyer of these shares just yet. So it will remain on our watch list as a potential long. Okay, folks, now we're going to segue over and into the pre-market activity. But before I go over the pre-market action, please subscribe to my channel, leave a comment, and click that bell button. That way you get notified of future videos. If you're watching this on the website, enter your email address. We hate spam too, and we'll send these videos direct to your inbox. So let's begin with the US dollar. We have a lot of positions on that are levered inversely against the US dollar. We are long of the gold miners. We have emerging markets. And a weak US dollar helps those trades. And we're going to be going over 4-hour charts for the purposes of this discussion. And what we're seeing set up here is an orderly consolidation of the US dollar. And in fact, we're beginning to show signs of a breakout on a 4-hour chart. You can see we just popped up above this declining upper band of resistance. And we do have higher lows. So this bar will close at 5 a.m. That's in a couple of minutes. We'll see whether or not we get a continuation move higher with the new 5 a.m. bar. But thus far, it looks like we have some pressure to the upside this morning for the US dollar. Now, with a stronger US dollar in mind this morning, we'll stay focused on the commodity plays. So we'll go to gold. Gold is under a bit of pressure this morning. Had a very strong day yesterday. We're down $6 this morning, just shy of a half percentage point. Longer term, we are very bullish on gold. I think that what Fed Chair Powell delivered to us last week was inflation on a silver platter. We talked about this in great detail over the weekend with regard to our TIP conversation, Treasury Inflation Protected Securities. And the Federal Reserve is going to allow inflation to run hot, which is going to set the stage for a big bull run in gold. So today anyway, we're seeing some pressure on gold. We are still above the 1310 level, which is critical support. And you can see here we are now trading down below this lower band of support. So we're probably going to see some additional selling on gold this morning. If we pull back to the 1312 to 1310 level, I think that's an attractive entry point, assuming that we reverse off of a retest of those levels. Taking a look at crude oil. Oil is pressing higher this morning. We remain in a trading range. Here's our lower band of support. And here's our upper band of resistance. And we are leaning into the upper band of resistance. So the stronger US dollar, not hurting oil any. Now, while I wouldn't go buying into resistance, I would certainly entertain buying oil on a break above this upper band of resistance at the 67.70 level. So oil looking strong this morning, up over a half percentage point. Natural gas, seeing a little bit of weakness today, down about a third of a percentage point. We did break out back here on this 4-hour bar on the 18th, rally, but couldn't hold the breakout. So we're back down within this trading range. So right now, natural gas is a watch, but we're building a nice base here for nat gas. So we'll be watching for a breakout above this upper band of resistance in green, or a retest of this support level here. So natural gas consolidating, and we're waiting for a breakout or a retest of support. Silver broke down overnight. This resistance level has proved to be very difficult for silver to hold above. We broke above it here, failed. We broke above it here on the 20th, failed. Again, we broke above it on the 25th yesterday, failed. We're back down below it again. So what we're looking for is a probable retest of the lower band of support. We'll see whether or not that holds. Ideally, though, I'd rather buy on a breakout fueled by a breakdown in the US dollar. So silver is just a watch right now. Now taking a look at bonds. The bond rally has been in fuego. I mentioned last night on Market Wrap with members that we should expect a pullback. We got that pullback because you need to remember, let's go to a daily chart real quick. We closed out the day yesterday and we're still above the third standard deviation Bollinger Band in red. In short, it's not supposed to be there. The last time this happened, we got a serious correction. I'm expecting the same right now. That means a rally in yields. Back to the 4-hour chart. Does that mean the bond rally is over? No, I don't think so. It's just gone too far, too fast, and it's poised for a pullback. Going to the stock market futures, we'll begin with the S&P 500. We're up slightly this morning. Yesterday's price action was not awe-inspiring. We are attempting to rally up and through the 28.13 level. I'm watching support at 27.90. If that fails and we do breach this support level, we're coming down here to 27.80 in a hard. And here's another line in the sand for us to watch for the S&P 500, the upper band of resistance. Let's take a look at the Nasdaq. The Nasdaq, very similar to the S&P 500. I'm not loving these charts. We are short the market. the small caps anyway, I should say. You know, when I look at a chart like this, I ask myself, is this a dead cat bounce? And rather than try to divine whether or not it's a dead cat bounce, that's a loser's play. All I care about is the outcome. I'm going to let the markets dictate which way we're going to trade this market. If we break out above this upper band of resistance, well, it's game on. The market's telling us it wants to go higher. However, if we get rejected at this resistance level and we fail to hold the 7,300 level, to round things off, 7,290 is more of an accurate number. If we break below that number on the Nasdaq, we're going considerably lower, probably down to 7,210. But as it stands right now, we are up this morning. Let's see whether or not this rally fades or do we get a continuation move higher. And that is it for this morning, folks. Again, please subscribe to my channel, leave a comment, enter your email address on the website. We hate spam too. And you get all my free commentary to your inbox. Have a profitable trading day and be well.